Assalamualaikum warahmatullahi wabarakatuh, and hi everyone. We are from group Misi. In this video, we will explain the topic of Mfrs 16, which is lease. According to the Mfrs 16, lease is a contract or part of a contract that convey the right to control the use of an identified asset for a period of the time in exchange for consideration. The agreement involves two parties, the lessor and the lessee. The lessor gives the lessee the right to control the use of its asset for a specified period of time, and in return, lessee agreed to commit to a specified series of payment to the lessor. The lessee contract indicates details such as the period of the lease, the periodical payment, and the condition involving the lease.
On this part, we just focus on the accounting treatment, which is a right of use asset. Right of use asset is the lessee right to use an underlying asset over the lease term. Lessee using the asset to generate economic benefit. Under the Mfrs 16 say that the initial cost of the right of use asset comprise first the amount of the initial measurement of the lease liability. Second is lease payment made at or before the commencement date, initial direct cost, the estimate cost of removing or dismantling the underlying asset as per the condition of the lease, and last one is less any lease incentive received. For subsequent measurement, the right of use asset is measured using the cost model unless another measurement model is chosen. This means that it is measured at its initial cost less accumulated depreciation and impairment loss, which is adjusted for any measurement of the lease liability.
For this question, we will focus on accounting treatment by lessee. Saya Berhad leases a piece of office furniture from Awards Berhad on 1st January 2019. The lease arrangement are as follows. The lease term is for 3 years and cannot be cancelled. Saya Berhad is to make annual payments of 3,000 beginning 1st January 2019. At the end of lease, the equipment is required to be returned to Awards Berhad. The equipment has fair value of 10,000 and an estimated economic life of 5 years. The implicit rate of the lease is 10%.
Required. A. If Saya BHD applies paragraph 22 to 49 of MFRS 16, what would the accounting treatment upon the initial recognition of the lease? First, I'm going to explain about MFRS 16, paragraph 22 to 49. If it is applied, then recognition of right of use asset, lease liability, depreciation of right of use asset, and interest expense of lease liability will happen. Now, our main focus will be on right of use asset, which will directly focus on depreciation of right of use asset as well, as it is a non-current asset. Back to the question, upon the initial recognition of lease, right of use asset will be debited and its amount is the total of lease payment and lease liability. Lease liability amount is acquired by calculating the present value of annual lease payment on discount rate of 10%. Next requirement is what should be the accounting treatment to subsequently recognize the lease. At the end of accounting period, we will then debit depreciation expense of right of use asset and credit accumulated depreciation of right of use asset. The amount can be calculated by dividing the value of right of use asset with 3 years, which is the lease term instead of useful life, because at the end of lease term, the ownership of the underlying asset will be transferred to the lease. We will then get RM 2735.50 cents. Third requirement is how will the lease be presented in its financial statement on 31st December 2019. Here we will put in depreciation expense of right of use asset under expense with the amount calculated in the journal RM 2735.50 cents. Last requirement is how will the lease be presented in its financial statement on 31st December 2019. First, we will put right of use asset under non-current asset with the amount RM 8206.50 cents. Then we will deduct its amount with accumulated depreciation of right of use asset. The amount will be the same as depreciation expense, which is RM 2735.50 cents, as it is only the first year of this depreciation happening. After deduction, the total value will be RM 5471.
So, what we learn from the question? First, right of use asset are initially measured at cost, which primarily includes recognized lease liabilities and any initial direct costs. Second, with the asset transferred to the lessee at the end of the lease, we depreciate the asset using the useful life. Otherwise, we depreciate it using the lease term, unless the useful life is less than the lease term. Conclusion: in this topic, the concept of leases will be introduced, followed by the ways to recognize and measure them in a company account. The standard ensures that lessee recognize right of use asset, the lease liability, and related expenses. In terms of disclosure, lessee are required to provide information that can become the basis for which the effect of leases on financial position and financial performance can be assessed by users of financial statement.